I'm your host, Josh Appleman, founder and CEO of Appleman Properties. Today we are joined with Don Spafford, finance and investing expert at Beyonder Holdings, seasoned in multifamily and RV resort projects, committed to family man and strong ethics. Don, we appreciate you coming on the show today. If you could let the listeners know a little bit more about yourself.
Yeah, thanks, Josh. I appreciate that. Thanks for the warm intro there. So a little bit about myself. Currently, I live in Idaho Falls, Idaho. For those that don't know, that's East Idaho. We're about an hour and a half or maybe 2 hours from Yellowstone Park. So it's a great area. But I grew up most of my life around Omaha, Nebraska. So that's kind of where I really say where I'm from is the Omaha area. Grew up there in the shadow of Warren Buffett. It's always given me a very curious interest in learning about investing and the power of money and all that kind of stuff. So that's kind of where I kind of started that path and wanted to become like a financial advisor, portfolio manager, somehow be involved with investing. And I've been following stock investing since I was like probably 13, 14 years old. Back when I had to read them in the newspapers, but it was that kind of what gave me that foundation of wanting to know how money works and make money work for me. I did pursue a degree in that, and the 2008 market crash kind of had given me maybe a different shift in my mindset about what I wanted to do. And a bit later from there, it's kind of where I took the direction of getting to real estate. So still involved with investing and finance and money, but just with something that I feel I have a little bit more control over than stocks.
Probably a lot more gratifying too. You can actually go out, see, feel, and touch what you've got going on, and like you said, a lot more control. So for sure. So you've got you're definitely expert as far as looking at markets, market analysis, and seeing trends. Can you tell us a little bit how that correlates with investing and finding the right spots and investment returns and all that good stuff?
Well, sure. Yeah. Well, I definitely would not ever qualify myself as an expert in it by any means ever. I try to keep myself a bit humble and know that I don't know everything. But but yeah, there's definitely having that kind of a financial background and understanding definitely helps. It's something that can carry over into real estate and other aspects as well. But it's kind of strange though. There's as much as we feel we know about where things are heading and what's going on and what all that. At the same time, things can change overnight. Even a few years ago with the pandemic, it looked like everything was going to tank, and overnight the government said, "Hey, we're going to send out money to everybody." Then everything just kind of turned around and came back up, and people that got scared and jumped out in a fire sale, regretted it later. Based on the current trends, I guess I'd say is the speaking about real estate anyway. The markets are still, pretty strong. At least in my area and the areas I see is that, it's been a bit tough in the last couple of years as interest rates have kept going up. But overall, it doesn't necessarily reduce the demand. People are still in need of housing. For example, there's still around my area lots of construction still going on, lots of new apartments and houses being built. People are still going out and having a good time and spending money, especially this time of year, obviously. As we're here, around Christmas now, but there's still at the same time a little bit of fear. I mean, people are, as far as investors, are still a bit fearful and skeptical. There could still be a recession. There still could be things that go wrong. All these high interest rates may end up catching up in the end and hurting people, which we of course have seen that this year with a lot of multifamily assets being foreclosed on. People had bought in the previous couple of years and maybe overpaid for them at the time, expecting interest rates to stay low forever. We're definitely caught off guard, I think. So with that, I mean, it's like given the standard like a attorney type of answer. It's like it depends. There's lots of things that could go one way or the other that we may still not have much control. I mean, the government could overnight say, we're going to drop interest rates and make things affordable again for everybody. So that could have a huge change on everything. So, but based on the current situation, I don't expect that to happen anytime soon. But I do think interest rates are probably going to remain stable for a bit here and possibly lower a little bit in the next year. Definitely not back down to like 2s or 3s anytime soon, if ever. But as long as people are doing their underwriting in the reasonable sense and using those numbers as expectations, then making their offers based on that and at a point that makes sense and not just assuming everything's going to go up forever, then they should be okay. Look at the numbers, and if if everything looks good as far as cash flow and overall returns, without just some unreasonable expectations, then things should work out well. And that goes for even home buyers as well. I mean, if you can afford the house payments, then yeah, buy a house, because they're still just proven over the last 20, 30 years. The next 20, 30 years, housing prices are still going to be going up, I'd expect.
Yeah, for sure. And there's a lot of speculation out on the in the marketplace about where interest rates are heading or going, and ultimately no one knows besides say Jerome Powell at this point. But there's like a Fed Watch tool that we keep an eye on just to see where the markets are heading. There's like a 93% chance that they're saying, like, in March we're going to see possible 25 basis point reduction, which who knows. It's all speculation. It's all there's also a report by UBS that was put out 2 weeks ago saying that their data is pointing towards like a 275 basis point reduction by third quarter of next year. So that would have to be like a black swan event for something to happen. But we're going into an election year, so who knows?
That has a factor too, for sure. Yeah.
But let's get to RV parks. Let's talk about the why and then where you see it heading.
Sure. Yeah. So just to give a little bit of clarification, when I personally don't like to use the term RV park, because that comes up with a different type of imagine or a picture in my mind, at least. So I use the term RV resorts, RV campgrounds.
I like
That's
that.
kind of more the assets we buy. Because for me, the RV park kind of more falls in line with like a trailer park, mobile home park kind of feel. Whereas what we purchase with Beyond Our Holdings are, basically short-term stay type properties. The RV resorts where people go and have a great time and they go home. So people don't live there long-term typically. So
it's the experience.
So that's what we are in. Exactly. We are offering this experience for people to come and enjoy themselves. So what drew me to this, maybe I guess 2.5 or so years ago, is that I was myself starting coming from a multifamily background, and for me, my goal was always cash flow. I needed to have cash flow from day one, and preferably a sizable amount. I didn't want just minimal, barely getting by, 2-3% cash flow. I wanted some, high numbers, 10% double digit type of cash on cash returns. That's kind of where I started with when I started buying fourplexes, I guess 7 years ago or so now. I wanted to make sure that they cash flowed, because I was trying to create that passive income so I could leave my job, was my goal, really. Or at very least have additional income to cover our family's needs and expenses should something happen to me, if I get injured or sick and can't work. And so as I was, getting into now more commercial real estate, multifamily type of assets, that was still always my goal. I still wanted to make sure I got cash flow. And coming out of the pandemic, it seems like people just went crazy when we're just out, buying everything left and right, offering way over asking price just to get, a quote unquote deal, which in the end, really from my perspective, affected those cash flows. I was like, well, these cash flows are relatively not that great for most of the deals I was seeing anyway. They were, low digit, maybe 4 to 6% cash on cash typically, which did not get me excited, honestly. And so I was like, there's got to be something else out there. There's got to be something else that was still offering great returns overall that I can find. And at this time, I was working from home. I've been working for a company for almost 20 years that is involved with the financial markets, really. But while I was working from home, I would be listening to podcasts all day long, just like this one. And one day I heard on a podcast somebody else talk about these RV campgrounds and the types of returns they can get, the multiple income streams they provide. So that's kind of really piqued my interest and got me wanting to learn more, and started researching, going to webinars, and just connecting people that are in that space, because I was like, hey, I gotta understand this. It seemed to make sense to me just because of obviously where I'm at here close to Yellowstone. It's a big camping area anyway. So I was like, well, if I can invest in this, great. But if I can even possibly get my foot in the door and become a part of one, even better. There's got to be somebody that wants to buy a campground near Yellowstone, so I could get out there and try to help market that and be their boots on the ground, the local person and whatnot. So that was my first objective, just to find a way to get in a deal, really. And as I was connecting with different people and again, learning more about it, just understanding it better, I one day through I guess online conversation, I don't know if it was on LinkedIn or Bigger Pockets or somewhere, but I got connected with a couple guys that just bought their first property, and were looking to grow a team and expand and do more. And so we got in a call and started talking about what their vision and goals were, what my goals were. And everything seemed to align, and that's kind of how I joined up with Beyonder Holdings. But again, what really attracted me to the space initially was just the returns I was seeing. I was again, not from just one source, but now multiple sources. That podcast and these guys I was talking to and other people I was connecting with, seeing that these double-digit cash on cash were possible. And above that, you're getting these just overall higher returns. So that got me excited. I was like, I gotta learn this. I gotta understand it, and I wanted to for sure invest in it. Then I got lucky enough to be involved with it. So that's kind of how it all kind of came about. And we can, of course, dive deeper into that here in a minute. I'm sure if you got some questions.
Yeah, for sure. Well, tell us about the resorts. Tell us what they're made up of. Do you all purchase the RVs and put them in the lot, or are they? I guess paint the picture for us if you could, listeners.
For sure, yeah. So no, we did not buy the RVs. We purchased the actual the land, the campground itself that has all the RV spots, essentially your RV pads and other amenities that are on site. So we own the property. People like yourself, maybe you own an RV or just want to get out and go have fun, go play at the lake or something. You can come to the property, rent a cabin, because most of our properties have cabins or their short-term rental or glamping options as well. But for the RVers, you can. Most RVers will know you pretty much have to make your reservation way in advance. Most cases, you're going to be filled every weekend to even try to expect to just pull in and get a spot. So, but assuming you made a reservation right ahead of time, you can pull in, park it there, plug in, get all your utilities, water, sewer, electric, and then just hang out there for the weekend or the week or however long you're planning to stay. Use all the amenities. Go rent a boat, go boating. Rent a golf cart and drive around the property. Come out to one of our concerts that might be going on. All these different activities that are just there to have fun with and enjoy. And then when you're done, you just unplug it all and you drive out and either go home or go on to your next destination wherever you're traveling. There's plenty of full-time RVers who just travel the country all year long. But that's kind of what we offer. Just this great place to come and hang out and have fun. And then, go on your way and go back to wherever else you're going to.
Okay, got it. And then, so tell us on the operator side, what does that consist of as far as you've got boat rental, you've got I guess maintenance would be maybe just upkeep, so killing weeds and let's talk about what it takes to operate the thing.
For sure, yeah. Well, in this sense, of course, being this destination, experience type of campground, right? It is very much labor intensive. It's not as simply just hiring a property manager and making sure everybody pays the rent on time and nothing much else, right? We have a full staff that's on site on these properties. People that run the camp store, possibly the boat rentals, maybe a little bar and grill kind of thing. Some of our properties have hotels and other things on them as well. There may be a restaurant, but we typically don't want to run. We don't want to run the restaurant. We're not in the restaurant business. We'll just rent out that space to a local restaurateur who operates it, right? But we do have some that have a small bar and grill. We can operate that. But yeah. So overall, it's very much labor intensive. The operations is very intensive. We have so that's one of our biggest expenses, just the employee staff costs as well as insurance. As far as insurance goes, I mean, I know a lot of people that are in the multifamily space that try to get the cheapest insurance you can possibly get to keep your expenses low. For us, we want to make sure we have the best coverage we can get, and that obviously comes at a cost because, people are at risk, and there is a risk somebody could drown or get run over or somehow get injured or killed on the property. So we want to make sure we're very much covered for any of those types of, situations. Not that I hope we'd expect that to ever happen, obviously, but it's always a possibility. So we're very much on the operations side. We have our own management company, Beyonder Camp, that manages our properties. We also do manage other third-party campgrounds as well. So that's kind of a whole inline system that we offer that resource for other campground owners. So we oversee all of our properties, and then are in constant contact with our general managers that are on site managing those properties, who then oversee their staff at each property as well.
So on the insurance front, do you all have each person that owns an RV? Do you have like a blanket policy or something that can come in to kind of limit your all's exposure as well?
That's a great question. I honestly don't know the answer to that question. I'm not involved in that part of it, but
I'm thinking like multifamily. We have tenants that have it's a requirement for tenants to have insurance as well.
Insurance, right? Yeah.
Yeah.
Obviously the people who own their RVs are going to have their own insurance for their RV, right? So in case they have, tornado or something that damaged their RV. So I assume that more or less would be sort of like that. Obviously, we're not going to require someone to get insurance for the weekend they're there to cover their spot. Seems like not like if you go rent an Airbnb, you're not going to, require to get insurance for that weekend you're there. But yeah, each person would have their own insurance anyway. It's a vehicle on the road. It's going to have insurance on it. So they're insured personally for their vehicle or their their RV. Um, but above that, yeah, there would not be, I don't think, any other insurance that they were required to pay to come and stay there.
There might be a value add component there. Just I
Yeah,
mean,
certainly.
little nuggets because Airbnb, there are some hosts that require the guest to put a deposit on for possible damages,
Yeah,
or click a button and do small an insurance which is reimbursable. But there's always new things that pop up in every industry just like that
yeah,
because
yeah.
now it's another carrot on the stick type of deal. But
Sure.
that could be a value add, and that's kind of leads to what I wanted to get to. So, say you buy the land, what are some value adds that
Yeah.
you all go and deploy for your investors to create the property more valuable to do a refinance if you all do them or a disposition?
Sure. Yeah, for sure. And thanks. That's a great idea, worth looking into for that insurance. So we'll check that out. But yeah, for the value adds, again, all the properties we purchase with our investors are value add still, right? We don't just buy a turnkey property, which we could do and it would operate fine, but we're of course looking for even higher returns to give back to our investors. So a big component of our value add is expansion. We want to find first of all a great property that's already operating well, just maybe not to its full efficiency that could, because these are mom and pop owners typically, so they have limited resources maybe. But if it's a great property, great location, we see that there's demand there. We'll expand it out, add on more RV sites, add on more amenities, just general improvements as well. Maybe, improving the actual, the RV pads themselves, make them nicer, putting in possibly a private, like fenced in pet area. Possibly a fire pit, little picnic area, all kind of private things that make it like a more of a higher end kind of resort type of feel. But yeah, the biggest thing is the expansion and the amenities are two of the biggest things we want to add on. Besides just the general improvements, making it look nicer, make the bathrooms clean and neat, bringing in good strong Wi-Fi, which we offer for free as a free amenity to our investors, or sorry, to our guests, because that is pretty much an essential thing to have these days. Wasn't so much in the past, but today it's what we call like the fourth hookup. You got your water, electric, and sewer, but Wi-Fi is also a necessity these days. A lot of people that work from home or work remotely from their RV, so that is a requirement. So we offer that for free to our guests. I know some other campgrounds charge for that, but we don't. And then again, on top of that, there's just almost the sky is the limit as far as what you can do with the campground. Whatever you can think of is something you could add on and bring in is likely something that would still work and make money. Just even so if you have a small pond or something, you can still bring in like some kayaks or paddle boards and just rent those out, and those will do great to bring additional revenue as well. We find ways. There's many mom and pop owners that, for example, will close down their campground during winter. So it's like in a winter state that gets cold and snow. We still, for the most part, the most of it will still close down, but we can still find a way to operate it. We can winterize some of those sites and bring in your seasonal campers that just want a place to stay even during winter. That, for example, like going skiing or ice fishing or whatever else they're out doing, or even just your traveling nurses, still need a place to stay. So we can winterize those spots and bring in seasonal campers to stay during those winter months, where mom and pop owner just would close it down completely. And there's even, in fact, there's been a few that we've purchased where those mom and pop owners would close it down and just let people store their boats and RVs there for free during that season. Well, of course, we'll charge now. We can charge for those people that want to store their boats and RVs in there. Nice. So that brings additional revenue. We also bring in a lot of reservations for the upcoming season during that time. So different things that we can implement still to bring in new revenue that was otherwise not there previously.
I was talking to there was another operator. This is probably last year, but they have I think they use like probably a white labeled app, but the guest is able to actually get firewood to deliver to their spot like on demand. So it's different. It's cool to hear that, and it's another revenue stream. That's what I like to hear is how many revenue streams does this thing have? Because ultimately it'll hits the NOI.
Exactly.
What do you all look like as far as like maybe I guess the delta from what you all have taken say mom and pops to where you all can push it? Like, how big of a spread are you looking at?
Yeah, it's going to vary by property, obviously, depending on what possibilities are there. And I'll say some of these what I consider mom and pop are still under like a major franchise. Like we've purchased several properties from KOA and from the Jellystones that are out there that are still mom and pop owned property, but they just have the franchise model from those other companies. And being that with the franchise, they offer help to bring in people with the branding, but they don't really do much else beyond that to really provide resources to build it out like they'd like to do. So for example, when we just actually purchased this last September, amazing property in a great location. It's about double what normal average occupancy is in a campground. So very, very high demand property. They just never had the resources to do much more with it. And so this one gives us pretty much potential to possibly quadruple the size of the property based off the number of spaces available to build out more RV sites, add in a marina with boat docks that was not currently there, even though they're on a big lake.
Nice.
Bring in aqua parks and other things that are just pretty much a necessity to really have there that just is not there. The other big thing there as well is food. There's not this property, they don't have any type of food offering, so people have to either bring their own like a picnic or drive back half hour or so to get it from somewhere else. So things like that we can say, okay, we can provide those solutions. We can provide all these things that are going to make this place just killer and just going to completely blow the current numbers out of the water. Even though it's already at high demand as it is, it could just be so much better by bringing in those resources that our investors can provide by having those funds available to do all that. So this one, for example, it already does well. I don't know the numbers off the top of my head, but I want to say probably about $1.5 million currently for the revenue that's already been doing it on its own. So we project that, of course, to be way more than that, probably 4 or times more than that or so. Typically on our average property, what we're looking for the makes it a potential deal for us to bring to our investors is first of all, of course, the cash flow. We're looking for that double digit, 12 to 15% cash on cash is kind of the average we target for a 5-year hold. But we're also looking for like a 2.5 to 3x equity multiple, so we can again do those expansion items, do the things to improve it, to increase that revenue, increase the value. And the other great thing that honestly is that you wouldn't expect. I even myself, when I first got involved, I didn't even have any clue. Is that the depreciation typically can be much higher for campgrounds than for other assets.
I would not. I would not know that. Can you get into what that looks like? That's incredible.
Sure, I can definitely do that. And so again, I'll say I'm no expert on this. I'm not a tax advisor, CPA, but from what I understand anyway, right? When you do a cost segregation study, to therefore get that accelerated depreciation. Initially myself, again, I was like most people think, oh, it's mostly land. What's there to depreciate? You don't have money buildings and whatnot. But when you think about it on a typical RV campground, you've got a lot of infrastructure, all these roads that kind of connect everywhere in between. You've got all your pedestals in each site, where your people connect through utilities. So all those things, and then of course some buildings and your showers and laundry and that kind of stuff. All that stuff, and especially if you get like a marina with boat docks as well, boat slips. Almost all those items fall under that accelerated depreciated category. So instead of having your 30-year, again, I could be wrong with this categories. Your 30-year, which does not give this accelerated depreciation, then you've got your other, I think it's a 15, 10, maybe a 5-year. So on a typical campground, obviously the land does not depreciate, so we'll take out maybe say 10 to 20% of the value for the land, but almost everything else is typically going to fall into that accelerated depreciation category. So you get a huge upfront year one depreciation. For example, last year in 2022, we closed on a property that gave back on the investor K1s a 222% depreciation that the investors received, which is fantastic. And I myself participated in that. I sold a couple of properties I had that year and just reinvested all into our deal to get that as well. Not even expecting I was going to get that much, but luckily we did. Obviously, this year, 2023, that 100% bonus depreciation goes down to 80%. Next year, it's down to 60%. So the sooner you get in, the better. Because the great thing about depreciation is that if you can't use it all in the year that you have it, it carries forward indefinitely until it's all used up. So I've been encouraging people to invest now this year at the 80% just to get that additional depreciation, have it available in case you need it next year or the year after, just to carry it forward.
That's phenomenal. Yeah, and that's the name of the game. Truly is protecting your capital and defer, ultimately die. That's the game, but it is what it is.
Yeah, for sure.
Very cool.
I'll add as well that since this is live, those are listening, tomorrow night, actually on December 5th, we are hosting a live webinar, which we have our tax advisor coming on explaining exactly
Nice.
that. He'll have the expert actually explain how that depreciation works and use that 222% property as a case study to go over all that as well.
Now, do you all utilize like a renovation budget to possibly capture like bonus depreciation as well?
Yeah. So anytime we have something where we tear down or replace some old buildings or whatever, then that also gets that depreciation as well, which is also a great benefit. I forget the word what it's called it, but yeah, those can, anytime you remove something, even if it's like just an old shack you never plan to use, you can depreciate that value as well.
Yeah, bonus it off, and that's still around, so that helps. I mean, it all goes to the greater cause. Keep
That's right.
keep more of your cash and reinvest it, redeploy it.
Yeah.
So you had mentioned what your investors can expect: 12 to 15 cash on cash, 2.5 to 3x. That's incredible, and that's within a 5-year hold. Is that right?
Correct. Yes.
And then you all are your strategy is to refi and then go into long term, or disposition and then find a new go into a new spot and do the value add.
Right. So our goal in the next 10 years, we want to hold at least 100 properties, right? So we're looking to purchase about 10 per year the next 10 years. So as we go through each of these 5-year period, right, that at the end of that, we would either, we don't necessarily want to dispose of property. We want to hold them, not just to sell them all off. But our investors do typically like to be paid out and be out in 5 years to get their money to reinvest and keep doing things. So we plan to either refinance or some other type of asset purchase through another entity of ours to be able to provide that return back to our investors, and then still hold the property going forward long term.
Got it. Yeah, that makes sense. That way, it's the overarching play. That's very cool. Wow, you guys have done extraordinary growth too here within the past couple of years. Just getting into space and then finding out all the capabilities that space offers. That's incredible. What is a learning lesson that you've had so far?
Let's see. Probably, I mean, there's I'd say one is for sure just the working with the sellers. I mean, obviously, in most cases, mom and pop owners, as you'd expect, don't really have great bookkeeping and things, right? But with them, there's also great potential, but also possibly not. So we always offer, of course, with the people we're buying from. It's like, hey, if you want to, again, save on your taxes, you can always reinvest back with us, keep your money working for you, still create that income, but also then get that depreciation to offset your tax bill you're going to get hit with by selling this property. And in some cases that works out great, and they're happy to do that. Other cases, in fact, this was very early on when I first came on the team, and we had a very large property we were trying to purchase in Florida, where the owner was planning to reinvest a large amount, which would have been I think probably more than half of what our raise was going to be needed for. And this property we were purchasing probably about half the actual value of it, which was amazing. But as time went on, this seller was able to come to our webinar and see our documents and things, realize the potential that was there, that he was missing out on, I guess, and kind of had a change of heart. He realized that he could probably sell this for a lot more, and decided to pull out his investment. So that kind of left us hanging. It's like, well, now we've got like a couple weeks left to refill his 5 or 6 million that he was putting in there, which kind of really put us against a wall. So much to the point where we had to just back out. We had to withdraw and save our earnest money because we didn't feel we'd be able to get the amount raised to close it in time. And then a few weeks later, he went and listed it with a broker for again about double what we had it under contract for. So we learned from that is that early on, at least, yes, we want to have those sellers reinvest with us, but we try to keep them out of our plans for their property, at least until after we've closed on it, and then say, hey, you can still reinvest with our next deal or whatever to still get those great returns and save your taxes. But we try to withhold our plans for the property until after closing, because otherwise they may have some kind of thoughts that they could go back and do something different that they didn't think of. So yeah, just to not put us in a bad situation again where we have to walk away. We try to keep them out of that information.
Yeah, and that's just what that's the industry. That's really going into multifamily, and you know what you can do with it. You know, really any asset class. It's just once you give away that information out, it becomes way more valuable in the eye of the beholder. So I totally agree with you on that. Very cool. And then if somebody wants to reach out to you and learn more about yourself, possibly invest, how can they get reach out?
Sure. Well, you can definitely reach me by my email, don@beyondercamp.com. I'm also very active on LinkedIn or Facebook, so you can definitely reach out and find me there. I'd be happy to connect and schedule a call. I'm always willing and open to talk to curious people, investors, whichever. Don't feel like you're wasting my time. I just like meeting new people and sharing what I can to help others.
Awesome, Don. We definitely appreciate you coming on today, and I'm looking forward to following you all and watching the growth. We will certainly talk soon. Thank you.
All right, thank you very much.